Please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Hi there, good morning and welcome. You're watching Chartbusters, the show where we highlight all the buzzing stocks of the day, get you expert advice on how to capitalize and trade on those stocks. All that packed in the next half an hour. I'm Mangla Malu. With me is Reema Tendulkar. Hi Reema, good morning. Not looking so bad for our markets. We opened flattish, then we stayed flattish for a fair amount of time, and now we've recovered from the low point of the day, currently sitting with a gain of about 0.25% on the Nifty. It's recouped that or reconquered that 11,500 mark as we speak. And this in an otherwise weak Asian screen. So the Hang Seng actually is lower by about 200 points. The Nikkei is lower as well. And the Shanghai is absolutely flattish with a mild green tinge, but we're doing well.
Yes, absolutely. And it's not just today. In fact, the Hang Seng has been underperforming the Nifty for the last few days. So take a look at this week itself, Monday to Thursday. The Hang Seng has lost close to about 3%, whereas the Nifty has lost close to about 1.5%. So the Asian market picture, particularly for the Hong Kong market, has been a tad bit weaker. So compared to that, the Indian markets have done better. And the mid-caps, which were underperforming up until now for the last many days, are just, performing a tad bit better today. And the advanced decline ratio is strong. So two stocks in the green for one stock currently in the red. But let's take it away then to the top headlines at this hour. It's Z Entertainment, which is the top Nifty loser after a big downgrade from Morgan Stanley. The brokerage firm cuts the target price to 410 from 610, moves the stock to an underweight from its earlier overweight rating.
Aurobindo Pharma gets a boost from an all-cash deal to acquire dermatology and oral solid business of Sandoz in the US for $900 million. However, the stretch on balance sheet will be a bit of a concern as the company is financing the acquisition via debt. The stock up 5%.
HUDCO gets a boost from strong disbursement growth of 30%, which drives loan growth to 24%. Asset quality remains stable with gross NPAs at 6.87% versus 6.28% quarter-on-quarter.
BEL continues to be under pressure. Axis Cap downgrades the stock to sell, cuts target to 64 rupees from 115. Other brokerages too downgrade that stock.
And Bharat Forge surges as North America August Class 8 truck sales set a fresh all-time high. Class 8 sales rise 157%, coming in at 53,100 units.
Right, just keep an eye out on a couple of stocks from the mid-cap space as well as the large-cap space. The Nifty FMCG index should come up for you. Over the last 3 days, we've seen a bit of a drubbing for the FMCG stocks, the likes of HUL, Nestle, all of them losing anywhere in double digit. And now we're seeing some purchase. So the FMCG index is at the high point of the day. That is courtesy Hindustan Unilever, which has a fair amount of weight on that sector, on that index rather. Hindustan Unilever is recovering from the low point of the day, currently at the high point. Along with that, from the broader markets, we have Dabur, which has suddenly surged. Remember Abneesh coming this morning and saying that it is their top pick in the sector, and the growth in herbals will be beneficial for Dabur. Britannia as well has moved to the high point of the day along with Marico. So FMCG stocks doing okay after the drubbing that we saw earlier. So what should one do with not just these stocks, the whole index as a whole? We have Ashwini who joins us. Ashwini, 25 points higher. Do you think this little uptick is should be used to sell, or maybe something is going to give?
See, first of all, it's a consolidation. Bank Nifty is up hardly 40 odd points. As the day goes by, and if your parameters improve further, parameters as in crude, USD INR, and the bond yields, if they keep cooling off, I think there will be follow through. The market wants to go up. It can't go up if rupee falls below 72. So overall, I feel we are set up for a bit of a pullback rally. Possibly Nifty can do 11,550, 570. Bank Nifty could get back to 27,800. And if there's a global, kind of EM pullback or short covering, we should be party to that. Plus, you have a Bank Nifty expiry today. So that way, there are enough shorts in the system to take the market higher. So if there is even a small positive, chances are that the market could move on the upside. Having said that, SBI is a buy with a stop of 293, target of 308. BOB is a buy with a stop of 142, target of 154. And IndusInd Bank is a buy with a stop of 1855, target of 1910.
Okay, 3 financial stocks for you, Ashwini. Z Entertainment has recovered nearly about 2% from the day's low. Your thoughts on the stock right now? How would you approach this mini bounce?
See, Z is now in a bear market, which means that it's broken its 200-day moving average at 560 and is now basically plunging vertically. So, large players seem to be getting out. And possibly if at some point there is a pullback, and maybe a 30-40 point pullback, you should be still selling into it. There's no sign of the downtrend ending or any sort of accumulation. This looks like somebody is trying to get out of the media stocks. I don't think there's much to do on Z immediately.
Ashwini, what on FMCG stocks? We're seeing a bit of a bump up after the kind of drubbing that we saw over the last 3 days. So the likes of HUL, something like a Dabur or even Britannia currently sitting towards the higher end of today's trading range. Do you think it's good for more, or maybe just wait it out?
See, the sense appears to be that there is some kind of change of view here, because if rates are going up all over the world, then high valuations tend to come off. So I'm not too eager to get into FMCG right now. Maybe more correction is needed, 5-7% more than what's happened, before you consider FMCG, because it's not really participating in today's pullback. So right now what you want to do is IT, pharma, financials whenever they've been beaten up a lot. So stick with that. I think FMCG needs to move sideways, consolidate, before they again start to perform.
Okay, thank you very much, Ashwini, for that. We'll get chatting later on in the day, so prime yourself for a possible short covering bounce today. Let's shift our focus then to the important 2+2 dialogue between India and the US in Delhi today. Sources exclusively to CNBC TV18 suggest that a major defense announcement is likely post the India-US 2+2 dialogue. We have Parikshit Luthra on the phone line with more details. Parikshit, how big could the announcement be, and any indicative timeline?
Well, we're hearing from our sources that the agreement on communications compatibility and security agreement, that is something that could be a big takeaway from this visit. A deal could be signed later today. An announcement could be made at around 2:20. The reason why this is significant is because it will improve the interoperability of the two forces. It paves the way for acquisition of more defense equipment, highly sensitive defense equipment from the United States in the days to come. So this is something that both sides are saying will be the big one. We're also hearing of a deal that is being discussed for multi-role helicopters, a government-to-government deal, and also a deal on armed drones that is being discussed currently. We could see some sort of agreement on this as well. Whether there will be an announcement on a government-to-government deal, that will be a very big announcement, but we'll have to wait and see whether both sides really agree to that. Apart from that, there will be substantive discussions on military-to-military cooperation, sanctions on Iran, sanctions on Russia as well. But clearly, defense and strategic partnership would be the big one, and there will be a strong declaration and a joint statement by both sides as well. Back to you.
All right, Parikshit, thanks a lot for that. The street will definitely be keeping an eye out on developments out there. But with that, let's move on. A strong balance sheet has driven the earnings for Mass Financials this quarter. Well, asset quality remains stable quarter on quarter. We have with us the co-founder and CFO of the company, Mr. Mukesh Gandhi of Mass Financial. Thanks a lot, Mr. Gandhi, for joining in. So a couple of questions before we get into your disbursement outlook for this year. You know, I looked at your loan growth. That came in at 3.5% quarter on quarter, AUM growth that is. But your capital adequacy ratio has actually dipped from 31.3% to 29.5%. Why such a sharp consumption of capital just despite a 3.5% loan growth?
See, we have a capital adequacy. Earlier it was at the March 31%.
Yeah.
So it's a reduction of only 1.75%. So that is bound to be there because of our own book portfolio has increased.
Not increased to the extent, right? 3.5%, right?
AUM.
Quarter on quarter growth.
Yeah, quarter-on-quarter growth, that is on AUM you are talking of. But it is also the function of the portfolio which is there on my balance sheet. We keep on assigning the portfolio to the various banks, and once we assign the portfolio to the banks, it is removed from my balance sheet. So in this particular quarter, my own book portfolio must have increased, and that is why my capital consumption is there.
All right. In the meanwhile, just watch out for a couple of commentary that's coming in from Anand Mahindra. He says that Mahindra Group has a lot to lose if the debate on data localization continues. So we'll try to get in some more details on that, try to get in perhaps a bit of reaction on that as well, saying that skill development program is floundering a bit. Any more details that you have, Reema?
No, just reading off what we can see on your screen. But let's continue our conversation with MAS Financial, Mass Financial. So we are living in a rising interest rate scenario, whether it's globally, perhaps even in India. We've already seen 50 basis points rate hike from the Reserve Bank. The expectation is that there could be more rate hikes in the offing as well. Your own expectation of what it will do to your costs? Do you expect to maintain the spread that you enjoy, your margins? Give us some outlook.
See, basically with the high interest rate, there's some impact will be there on our NIM. So NII will get compressed to the tune of 30 bips to 40 bips, and certain things we will be in a position to pass into the customer. We will be in a position to get at the better rates because of the relations what we have with the existing bankers. So we will get some concessions so far as the interest rates are concerned. But definitely in the rising interest rate scenario, our NII will get compressed to the tune of 30 to 40 basis points.
Okay, but you will be able to pass it on.
We will be in a position, partially it will be pass it on to the customer as well. This is what I am talking of, the net impact.
Net impact you said was 30 to 40 basis points on your NIMs.
Yeah. All right.
Another question as far as your disbursement is concerned itself, 3.5% growth quarter on quarter, 30% growth year on year, 4,250 odd crores is where your AUM currently stands at. Where do you see it by the end of this year?
By the end of the year, as per our projection, even in the beginning of the year also we gave our projections. So we will be growing in the range of 25 to 30%.
Okay. Unfortunately, we've run out of time. Thank you very much for joining in. That's Mass Financial expecting a 25 to 30% growth. Get into a break. On the other hand, on the other side of the ad space, Zee Entertainment has tanked in trade after Morgan Stanley double downgrades the stock to an underweight. Ashwin Patil of LKP Securities joins in on the other side. Welcome back. Morgan Stanley has double downgraded Zee Entertainment, and that's taken the stock lower by 5.5%. To understand the rationale behind this negative note in Zee Entertainment, Mangalam, you've gone through the long note. The key reasons.
The key reason is basically, the increasing penetration of digital media. You and I consume a lot of Netflix and Amazon, so they believe this would hurt the revenues of traditional media. And on that basis, they've cut the target price from overweight to underweight, so that's a double downgrade. They've cut their target price by 200 rupees from 610 to 410 as well, and that is their case. The content consumption moving online poses challenges to traditional media, and Zee, while it has its OTT platform, they believe that is a Red Sea scenario where it's very competitive with Netflix, Amazon, possible competition coming in from large domestic players like Reliance Jio as well, and this will drag their margins by 3 to 5% because it is something that involves or requires a lot of investment. In their bull case scenario, this business Z5, which is their OTT business, can break even by FY23. Their base case is break even by FY25. They've seen this in the US as Netflix penetration increased in the US, TV advertising revenue growth came down, and for India they expect the share of advertising for digital surge from 17% to 31% by FY25. So which is what has taken them to cut their target by 33%. And if you take a look at the stock right now, their FY20 EPS is close to around 20.4. That's telling you that Z is currently available at 22 times. And that brings in another bull case, a contra view. Yesterday itself, CLSA wrote that the digital ad revenue for the industry will jump 4 times to $5 billion. And this will lead to an explosive level of ad growth. And despite OTT wave, TV's reach of close to 920 million users will continue its ad revenue share. Netflix, Amazon Prime will be winners for the first 5 crore people. Platforms like Z5 will go much deeper. The next 8 crore people will come in from there. So they are bullish on this prospect, while Morgan Stanley believes that this is not a place to be. Okay,
to break the tie, let's toss it across to Ashwin Patil of LKP Securities to find out which camp he believes Z Entertainment should lie in. Ashwin, how much of a threat are the OTT platforms and the way entertainment is getting consumed on these OTT platforms a threat to Z Entertainment? And where do you stand on the stock and the fair value?
See, I think that OTT platform is definitely going to create some, upheaval in the media industry, but it will take some time. Not immediately that, every user in the country is shifting to OTT, because, there are a hell lot of users in the rural markets and they are not yet aware of OTT, what is OTT exactly. And in the urban markets, the young generation and all, they are shifting gradually, and they are actually, the players such as Netflix, Amazon and Hotstar are gaining quite good out of that. But other players are also there, like Z has recently entered into Z5, and they have also announced that they'll be coming up with about 100 to 150 new content, which will be including films and series and serials and etc. So that is going to help them definitely in the near to medium term. But it's like, whenever you enter into a new business, it takes some time to break even, and the cost that you incur are definitely more than what you are earning at the initial stage. So I think that it will take some time, maybe about 2 to 3 years at least, to break even. But once it breaks even, there will be a huge diaspora open for Z to gain great revenues out of it. The OTTs till then will be spreading out in India. Maybe rural markets will take some time, but at least in the urban and the semi-urban cities, it will be the buzz thing at that time. So Z is taking great steps, I think, and definitely we think that the margins, which are in the vicinity of maybe 31-32%, may come down to about 28-29%. But it's not a case for us to sell at this point in time. We think that it's a great opportunity, and on the other hand, the FMCG companies are spending to a great extent, and that is benefiting the ad revenues for Z. And also, if you see the market shares in various geographies, Z has become #1 in most of the geographies like Odisha, Bengal, Maharashtra, and also in the southern markets, it's gradually and gaining great position over there. So I think there is the concern which is at this point in time is a bit overdone, because the management had also said during the Q1 call that they had all made these plans open, and they had also said that the margins will be getting hampered up to some extent in the coming few months or the quarters. But the renewed tension that we are seeing at this point in time is actually, it's not too much of a concern, we think.
All right, Ashwin, thanks a lot for joining in with that take on Z. He says that this fall is an opportunity to buy, not too worried about this disruption, believes that Z is doing enough to overcome and benefit from that. With that, we slip into a short break, come back, get you more on the markets and individual stocks. Welcome back. Some exclusive news coming in on account of Future Retail. The Bharti Group may be looking to exit the Future Retail stake entirely. CNBC TV18 learns from sources that Bharti's subsidiary Cedar Support Services has begun talks with a clutch of private equity investors to exit its remainder 3% stake in Future Retail. Priya Shet has this exclusive. Priya, go ahead.
Well, absolutely. After selling about 6% stake to Azim PNG-led investment arm PNG Invest, the Bharati subsidiary, Sedar Support Services, has started initial talks with investors for the sale of its remaining 3.19% stake in Future Retail. Now, what we do understand at this point is that initial talks have begun with a clutch of domestic as well as foreign private equity players, and the deal value is estimated to be around 850 to 900 crore rupees at current market value. But of course, it could go through at a sad higher price. Now, the deal will also involve a clawback provision, which has been a part of the agreement with Bharti, and Future Retail will perhaps get an inflow of about 400 to 450 crore rupees as a part of this clawback agreement. But as far as the timing of this deal is concerned, we do expect it to happen over the next 4 to 8 weeks is what we do understand from our sources. But of course, the timeline or the deal will largely hinge or go through after the Future Retail deal with a foreign investor is completed. Do remember that there are a clutch of foreign tech investors, the likes of Amazon, etc., who have been eyeing about 10% stake as far as Future Retail is concerned. So that's a space that we will watch out for. But we did reach out to the companies. Bharti said that they do not want to comment on market speculation, and Future said that they cannot comment on a deal where they are neither buyer or seller.
Okay, Priya, thank you very much for that. With that, it's a wrap on this edition of Chartbusters. Thanks so much for watching.